try and say we're going to forecast the rate of which our revenues are going to grow based on inflation and all the information we have, but we're not going to figure out what's going to happen to our expenditures based on inflation. And so this is something I think this isn't not the way we should do budgeting. And this simply, the bill, and I do have, before I go further, I have a A1 amendment. It's an author's amendment, and basically, I think it's in the packets, but all it does is strike the new words on line 110. Strikes the words inflation and that's to make sure that, in effect, MMB, when they're doing the forecast, they can figure out the best way to do it. We're just telling them we want you to do the best forecast you can for us. It's a simple concept I have in the packets. I had asked to put in two commentaries, one from William Melton, he has been a member of the Minnesota Council of Economic Advisors, an economist, was several years ago at American Express Financial Services, and the headline of that sort of summarizes the reason this kind of thing is important in terms of giving the public and legislators and everybody information on where we stand. The headline of it is "State Budget Surplus Sounds to be Too Good to be True," and it is. The numbers are distorted by how inflation gets factored in. And with that, I also have a commentary from five former finance commissioners who have served under DFL, Republican, and Independence Party governors, saying how this is not a logical way to do this. And so with that, Mr. Chairman, I'd like to offer the A1 amendment.
Thank you, Senator Marty. Senator Marty offers the A1 amendment. Members, any questions for the author as he gets it in the shape he wants the bill to be in? All right, Senator Champion.
Just for clarification, it seems as if page 1, line 10 deletes the new language, so that would delete of inflation and then it looks like you have some stricken language that starts on the same line but then proceeds to 1.11. So can you just clarify for me what we're doing there?
Yes, Mr. Chairman, Senator Champion, the new language, meaning inflation and, the deleted language we're not reinstating. It's only deleting the inflation and.
Thank you.
Senator Champion, any follow-up?
No follow-up. Thank you, Mr. Chair.
Members, any other questions to the A1 amendment? Seeing no questions, all in favor of adopting the A1 amendment signify by saying aye. Aye. All opposed? The amendment is adopted. To the bill, Senator Marty.
Mr. Chairman, I think that sort of explains the bill. I don't believe we have we're putting our finger on the scale and saying we're going to count inflation on one side of it and not the other side. I think that just doesn't make sense. We have several witnesses. I'd like to start with MMB. I think the State Deputy Commissioner, Britta Raitan, is going to be speaking, and Brian Dahl is, I believe, maybe here, maybe more for questions.
Thank you, Senator. Deputy Commissioner Raitan. Executive Budget Coordinator, Mr. Dahl. Welcome to the committee. Nice to see you again. Anyone going first? Okay. Deputy Commissioner Raitan, if you could start, please, by putting your name on the record and then begin your testimony.
Thank you, Senator Friends. I'm Britta Raitan, Deputy Commissioner at Minnesota Management and Budget, and thank you for the opportunity to speak with you today. MMB does support including inflation in the forecast for state spending, which puts it in line with our forecast of state revenues. We think it's an important factor in presenting a reliable picture of the costs and revenues that the state can expect in future years. As required currently under 16A.103, the state expenditure forecast does not include an allowance for inflation. And the result of that is that the forecast of state expenditures is not adjusted to reflect increasing costs of maintaining state services in future years. There are several exceptions in the forecast to this treatment in places where underlying state law accounts for price growth in our payment formulas. So programs such as special ed, nursing facility payments, and property tax refunds have some element of inflation or price growth built into those underlying formulas. There are also places where it wouldn't make sense to apply inflation, such as our debt service payments, because those are known years out. And our interest rates on those payments are known. The revenue forecast, however, does reflect the impact of inflation. Because of that difference in treatment, growth in prices increases projected revenues, while on the other side of the budget, the expenditure forecast does not reflect those growing costs. And this understates the likely future spending because price increases can result in higher costs and the erosion of buying power or the ability to deliver services. As a result, the forecast could project a surplus while ignoring those future cost increases. And the nuance here is that this imbalance is only appreciated by those that are very familiar with the intricacies of this process and those forecasting methods. And so it's not generally understood for a broader audience when we're releasing kind of those bottom line numbers with the forecast. MMB's Council of Economic Advisors has repeatedly recommended that inflation be added on the expenditure side of the budget forecast. They state that the practice of excluding projected changes in the price of goods and services is fundamentally misleading. And you can reference our forecast book. I'll hold it up, but you can reference our forecast book. There is a letter from the Council of Economic Advisors that is in all of our forecast books, and they make this argument each time. As of the November forecast, we estimate the inflation in 24-25 would add approximately $1.55 billion in additional spending over the current forecast for that biennium, and $3.31 billion to the current expenditure forecast for 26 and 27. That estimate is calculated by applying the projected CPI growth of 3% in 24 and 2.5% in 25 over the current forecast for that biennium. And it's important to note that we apply that growth on the portions of the budget where it makes sense to apply an inflationary growth number to. We exclude the programs that already have underlying inflation built into the formulas, or we exclude the spending areas where it doesn't make sense to add an inflationary factor. Prior to 2002, the forecast did include an estimate of inflation. At that time, the impact was included in the forecast for those years without an appropriated budget. So that's another important factor. We're not adding inflation on numbers that have budget numbers where the appropriation has already been made. It's looking into future years and applying an estimate of inflation to those years. The forecast referred to it at that point in time as discretionary inflation. As the term discretionary inflation implies, this represents spending that wasn't required by law, but rather reflected the impact of price increases on government operations. And at that time, the estimate was calculated by applying CPI to most general fund expenditures, and then was reported as a separate line in the forecast documents. But it was essentially excluded from the balance that was reported then at the end. Given that was the methodology prior to the current language that we operate under, we assume that we would return to a similar methodology by striking the language that prohibits us from including inflation in the forecast. This is also something, though, where we will continue to talk with the legislature about how we go about integrating inflation into the forecast going forward. I appreciate the opportunity to discuss this topic with you today, and Brian Dahl and I are happy to answer any questions that you may have.
Thank you very much, Deputy Commissioner. Well done. Members, before we go to Mr. Dahl, any questions for Deputy Commissioner Reitan? Senator Drahan.
Thank you, Chair, and thank you for your testimony. And I'm new to the committee, so bear with me. And it's been a while since I was at college studying business and different metrics, but deflation. It's been a long time since we've had deflation. But if we are going to include inflation, should we include deflation?
Deputy Commissioner Wrighton, or Mr. Dahl, if you want to tackle that.
Mr. Chair, Senator Brian Dahl from MMB. I think that that's something that we would want to look at. Again, as Deputy Commissioner Rayton testified, we would want to work with the legislature to make sure that our forecast is providing the best information. Certainly, we're not in a deflationary environment right now. But if those circumstances existed, we would want to provide the best information possible so that our forecast projects the costs incurred by state government looking forward.
Because
Senator
Chair,
Drahan.
if I could, thank you. You know, it happens very rarely in our history, only a couple times. But I think we should include deflation if we do. We seem to be having a lot of once in every 100 years or every 500-year things that happen. So I would recommend that we include deflation also if we're going to move forward with this. Thanks.
Thank you, Senator Draheim. Senator Marty, I know Mr. Nauman had a comment. Do you want to
Sure,
go
I want
first?
to just quickly
Senator
say
Marty.
that this bill they have the ability to do that. The only thing they have now is they're not able to factor in inflation if it happens, but if it goes the other way, what we're trying to do is take the legislature's finger off the scale and say, you guys figure out your work.
Senator Draheim, any follow-up?
Thank you, Chair. I just thought I'd bring it up for the discussion as we move forward today on this bill. I know it's very remote, but if we're going to say one, maybe we need to put both in. And I would, if Mr. Nauman has any thoughts, I'd love to hear him.
I think he does. Mr. Nauman.
So, thank you, Mr. Chair and Senator Draheim. I'll just call your attention to the language of the bill. What the operative language is on line 1.10 and 1.11. It strikes the language that prohibits MMB from including an inflationary effect. So arguably, even under the current language, if there were a deflationary economy, that could still be included in the forecast because it doesn't prohibit that. But this, as has been testified to, the language removes the calculation of inflation. So there is, I mean, if MMB in its judgment and other statutes help guide what should be in the forecast and what shouldn't be in the forecast, if in their judgment the agency felt that we were in a deflationary effect and that should be calculated, I think that authority exists.
Good to go, Senator Draheim. All right. Thank you very much. Again, Mr. Dahl, if you don't mind introducing yourself and then welcome your testimony. Oops. Oh, I'm sorry, Senator Eichhorn.
Thank you, Mr. Chair. On the point Mr. Nauman was just making, he said that you'd mentioned that they could choose to include deflation if they wanted to, if we were in such a period. Could there be a scenario where they could choose, if they wanted to, not to include inflation? I just want to make sure that it's going to be applied consistently. So if we're going to do this, we're going to keep doing it, or if we're not going to do it, we're not going to do it. I just want to know that it would be kind of a consistent thing.
Thank you, Senator Eichhorn. Why don't we direct that to Mr. Nauman first and see if you get an answer, and if not, we can follow up. Mr. Nauman.
Mr. Chair, Senator Eichhorn, I think the purpose of our current forecasting process is to reflect the effect of the economy on the overall state budget. And I think this language that's being proposed for your consideration that eliminates inflation removes one of the considerations that would be an effect on the forecast. I presume, although MMB can speak to this point, if we were in a flat period where there was no inflation and no deflation, they could choose to have zero as be the inflationary effect, which would be a net no change. And to Senator Draheim's point earlier, if we were in a deflationary period, I presume they would include that sort of analysis in the forecast. The idea is to reflect the general economy's effect on the spending side of the budget.
So
Senator
quick
Eichhorn.
follow-up on that, then I'll ask my next question, then that's all I have. So kind of the other question, it could, if even if we were in an inflationary period like we are now, could they choose not to include that if the agency chose to do that? I don't know why they would do that, but it just kind of a curiosity. Then the other piece for the Deputy Commissioner, you had mentioned a couple numbers that I'm hoping you can mention again because I didn't write them down quite quickly enough. Some of the, and I think you said, and correct me if I'm wrong, potential additional spending we could have if you were able to include inflation, or would that just kind of mask some of the spending that we would be doing? If you could just clarify that a little bit for me, I kind of missed just a hair of that, and if you could repeat the numbers again, that would be helpful.
Thank you, Senator Icorn. Deputy Commissioner Wrightown?
Yeah, so the numbers I was referencing was the estimated impact of inflation in 24 and 25 on our current projected spending. So that's 1.55 billion in 24 and 25. And 3.31 billion in 26 and 27. But I think the important piece that I want to emphasize in this discussion is that whether or not we account for inflation in the forecast doesn't change the legislature's ability to allocate spending. So providing an estimate of inflation, we think, just provides a clearer dollar amount to the public about, how we refer to what's available on the bottom line. It's more of a balanced view for the public. The legislature still, regardless of whether we are including this inflation in the forecast or not, still has the same amount of money to work with when making budget decisions for the upcoming biennium.
Thank you, Deputy Commissioner. Senator Icorn, you good? Senator Dames. Senator Dames.
Well, thank you, Mr. Chair, and this might be for Mr. Nauman, but so this allows them to include an inflationary, and as you had stated earlier, if there was no, if there was a deflationary period, if they chose to, they could include that. So let's say that we are in a zero, there's no deflation, no inflation, but if they chose to include add an inflation factor, would they still have the right to do that?
Mr. Nauman.
I think, Mr. Chair and Senator Dames, I just want to make sure I'm going in the direction that you're intending. I think the point here is, I went down the rabbit hole of the expenditure side with this language, the expenditure side is intended to reflect what the inflationary pressure or deflationary pressure is. And if it's flat, then the intent for the agency would, I presume the agency would, they could speak to this, would reflect a zero change. I think I spoke to that earlier. Is the question that you're asking, would M&B choose to include inflation if there was no inflationary pressure?
Yeah, would they have that authority to do that?
Well, the language does not specify one way or the other in that circumstance. It doesn't contemplate if there's inflation, M&B can, or if there's no inflation, can M&B provide inflation regardless. I think in some respects, there's other statutes that guide the responsibility of the agency to reflect real economic conditions. There's a forecasting process that many of the agencies do that reflect real economic conditions throughout the enterprise. I think it's a question of, maybe the question is better put to the agency about how they would handle that circumstance.
Thank you, Mr. Nauman. Any follow-up, Senator Dames?
I would like to have the agency answer that.
Deputy Commissioner Wrightown.
Sure. I just want to highlight kind of the professionalism of the process of producing the forecast. So on the revenue side, we have our state economist, Dr. Kolumbakitis, who is, we contract, she's an economist with the University of Minnesota. We're relying on data that is vetted, national data to produce our forecast. We use documented, forecasted, by large national forecasters, their assumptions about changes in CPI. And so there is a professional ethic in terms of how we are producing this forecast that it's hard to imagine that M&B of the future would deviate from that. But I also want to highlight that we have the Council of Economic Advisors, which are external economists that advise on our forecasting process. And so I guess what I'm saying is I can't imagine there would be a deviation from a projected level of inflation that is well documented and vetted.
Thank you, Deputy Commissioner.
Thank you, and
Senator
thank you,
Daines?
Mr. Chair.
Senator Marty, do you want to add here?
Yeah, Mr. Chair, as a legislator, looking at what we expect from our state agencies, I think we expect the professionalism that is done. The whole point of this bill is to say, 21 years ago, the legislature put its finger on the scale and said, come up with numbers that look this way instead. And I don't think that's the point of what we want to do. And yes, could we have people who decide, we don't care what the inflation numbers from all the forecasters are, we're going to come up with our own numbers. I don't think the state, I don't think any administration of either party would want that. And I think we have to trust the professionalism. And the whole point of this is let's get the legislature's finger off the scale.
Thank you, Senator Marty. In other words, we expect the professional ethics to require the forecast to include inflation, deflation, or even zero. And this bill simply says we're going to stop telling MMB, even if you wanted to forecast inflation, you cannot. Is that fair, Senator?
Mr. Chair, that's a very good description.
All right, thank you. With that, Senator Draheim and then Senator Murphy.
Thank you, Chair, and thank you, Senator, for bringing this forward. And I don't disagree with the concept. The only thing I was getting at, I didn't mean to go down this rabbit hole, was that, you know, in line 1.13, we do call out the rate of inflation. And I guess it could be a negative rate, right? Is that, my econ's 30 years old, so, So is that factually correct then? If the rate of inflation could be a negative rate and then application of inflation, the amount of state bonding on 1.3 and 1.13 and 1.14. Is that how you interpret that, Senator Marty?
Thank you, Senator Draheim. Senator Marty.
Mr. Chair, Senator Draheim, yes, that we want them to figure out how this all fits together. Positive, negative, neutral.
Thank you, Senator Draheim. Senator Murphy.
Thank you, Mr. Chair and members. Deputy Commissioner Rayton, were you in the role that you're in now 21 years ago when the legislature made this change?
Deputy Commissioner.
Senator Murphy, no, I was not.
Thank you, Deputy Commissioner, nor was I, though I do recall this policy change when it occurred. And so I don't know that you can share with us the practice of the department in forecasting prior to this policy change, but is it right to assume that you and the others in the department use generally accepted accounting practices when you look at the forecast and give the legislature the information that it needs to be able to do our work?
Deputy Commissioner.
Senator Murphy, we use, I mean, much of the work happens through our state economist, and so kind of methods that are generally accepted in that field, certainly. Also, I want to point out that state law is guiding us on many of the assumptions about appropriation levels because base is set in law. And so, yes, I would answer yes to that.
Thank you. Senator Murphy, any
Thank you,
follow-up?
Mr. Chair. Yes, thank you. I appreciate that, Mr. Chair, and I appreciate that very much. I have been, for many years, wanting us to change this policy because I want to rely on a forecast that gives me the best information. We have had a lot of snow in the month of January. It has been a very snowy month, and like most Minnesotans, I pay attention to the weather to understand what it is that I'm entering into. Last week, I got stuck on the street that I live on twice because there was so much snow. But I knew it was snowing, and I knew it was snowing because I could look out the window, and I knew it was snowing because I was listening to the forecast. And then I had to make a decision about what I was going to do about that. And when I think about the work that you are doing, you are predicting for us based on the best information that you have, where we're headed, so that those of us who are elected to represent the interests of Minnesotans can make decisions based on that forecast, just like we get from now elected Senator Kupek and Senator Mitchell, who are meteorologists, who are telling us what to look for. You're going to be telling us what to look for so we can make budgetary decisions. Is that a fair analogy to describe what we're talking about here today?
Deputy Commissioner, analogy?
Senator Murphy, I think that makes sense. And what I think is really important about that is that the forecast is really providing information to set the table for decision-making. Whether the inflation is above the line or below the line, it's really, what are we communicating publicly as the available balance? And not accounting for inflation when we're communicating that number can be distorting.
Thank you. Senator Murphy?
Thank you, Mr. Chair. Thank you.
Any other questions before we go to Mr. Dahl? Senator Pratt, and then Senator Westrom.
Thank
Senator
you.
Pratt.
Thank you, Mr. Chair. Ms. Rattan, just a quick question. How would MMB operationalize inflation in the fund balance?
Mr. Dahl.
Do you want me to? Sure. Mr. Chair, Senator Pratt, I think that we would want to work with the legislature, consult with the legislature, and make sure that implementing this bill would work for the legislature and the public to understand the effect that inflation has on costs to state government. Certainly, we would want to look at how it impacts how we forecast base appropriations in the forecast. There are multiple methodologies that we could look at. We would want to make sure that we're projecting the most accurate costs, but also make sure that our forecast doesn't imply that that inflation, puts appropriations on autopilot in the future.
Mr. Dahl. Senator Pratt?
That's fine.
Senator Westrom?
Mr. Chair, I'll wait till Mr. Dahl has time to testify first.
All right. Senator Westrom preserves his place in line with that. Mr. Dahl, your testimony, please.
Mr. Chair, I appreciate the opportunity. However, I am just here to answer questions with Deputy Commissioner Rayton.
Well, then, Senator Westrom, sounds like you're up.
Mr. Chair, Senator Murphy, or Senator Marty, excuse me, to Senator Draheim's question, and he brings up a good point. I'm wondering if the word deflation is a more accurate way to describe it if we were in negative growth terms. I think the common definition of plain language reading inflation, inflate means to go up or to expand. And so just to make sure the clarity is in there for the future and those reading this, when maybe someday you won't be here to help interpret what you just told the committee, I'm wondering if you'd be open to an easy oral amendment that would just say inflation or deflation, just to, so we memorialize and are crystal clear on what we're talking about, and it's easy for those reading the statutes to know.
Senator Westrom, thank you. Senator Marty, I think that's a question for you first. Sure. Senator Marty.
Mr. Chair, Senator Draheim, to me, when it says determine the rate of if inflation, if it's a negative rate, if it's negative 1%, then they're figuring out what you would call deflation, what I think we would all call deflation, but that's the rate of inflation, is negative or positive or neutral. And I think this is the standard language that every economist I've ever seen uses. I don't think we need to change it any beyond that, but it looks like Mr. Nauman is.
Thank you, Senator. Thank you, Senator Marty. Senator Westrom, I think we're going to go to Mr. Nauman. Mr. Nauman.
Okay.
Mr. Chair, Senator Westrom, I think it might be helpful to talk a little bit about what Section 2 of the bill does. So this is language, I'll just take a circular route to get back to your point. This is language that requires that MMB consult with chairs and fiscal staff ahead of the forecast. This is a normal process that MMB has. My House counterpart and I participate, for example, in a meeting about 3 weeks prior to the forecast where MMB gives us some insight into some of the choices that are made as part of the forecasting process. This language adds the language, the operative new language adds the rate of inflation and the application of inflation into that consultative process. I think it in large measure adds to language what M&B is already doing. They provide to us an estimate of inflation. And I presume, again, to the point that Senator Dames and Senator Eichhorn were making earlier, if there were a deflationary effect, they would be providing that as well. With that said, it certainly would be an amendment that could be made to say the rate of inflation or deflation and the application of inflation or deflation if that were preferred.
Thank you, Mr. Nauman. Senator Westrom.
Mr. Chair, and maybe to the Commissioner, could you share with us, I mean, in the terms of talking about economics and the economy, if that is accurate, that inflation captures both negative or positive numbers, why do we even use the word deflation in economic terms? What's the word deflation mean, and why is it used in economic terms if inflation captures both ends? If you could share insight on that, if you know, because it seems like we wouldn't need that word in our vocabulary if inflation says it all.
Thank you, Senator Westrom. Deputy Commissioner?
Mr. Chair, Senator Westrom, I wish I was an economist, but I'm not. And our state economist, Dr. Kolumbakidis, isn't with us today. We can certainly follow up. I would rather consult an economist on that question instead of opine, because I don't have the answer.
Okay. And
Senator
Mr.
Westrom.
Chair, is there anybody at the test that can answer that, or Mr. Nauman, that's got some background in economics? Because I know the word is used a lot, and there's no reason we'd use it if inflation covers it all.
We'll turn it to Mr. Nauman. Senator Westrom, I think Mr. Nauman's testimony is that there's not any apparent downside to adding the word deflation, but that it is anticipated that MMB already speaks that language.
Sure.
So I think your question was about an oral amendment. With that, we're going to turn it over to Mr. Nauman again to take a crack at it. Mr. Nauman.
Mr. Chair and Senator Westrom, I think the term deflation, I'm also not an economist, but my reading of this is that the term deflation just is a descriptive term to indicate that there is a shrinking economy or the shrinking prices in the economy. And inflation is the reverse of that. So I think if you're concerned and would feel more comfortable having the consultative role that MMB performs with chairs and with fiscal staff to reflect that fact, I think an amendment could be in order if that were your preference.
Senator Westrom.
And Mr. Chair, Mr. Nauman, would there be other parts of the bill you would suggest to be consistent that we should do it? And I'm asking you because I anticipate I'll offer the oral amendment at some point, so I won't do it right now because there's more discussion to have, but I think that would be improved just for clarity purposes, and going forward, that's what we're talking about. I think that's what it should say too. But if you could look at that and let me know, I'd take your advice on that.
Thank you, Senator Westrom. So I think you're saying Mr. Nauman has a little leeway here to take a look about where it might appear in the bill for the possible oral amendment of the word deflation, wherever inflation currently appears. Am I getting that?
Correct, Mr. Chair. The words or deflation.
All right. Thank you, Senator Westrom. Understanding that we have Senator Marty waiting to address this issue, Mr. Nauman's now going to crack that book. Senator Marty.
Mr. Chair, I really don't know that I would advise against changing. I mean, I think yes, I would use the word deflation if we have negative inflation. I'd say it's negative inflation, but in common use, I'd probably say deflation. If we have 7, 8, if say you have 15% inflation, I'd call it hyperinflation, but it's still inflation. It seems to me that the more we muck up the words, this is, as Mr. Nauman pointed out, just the requirement that when they are working out these things and determining the rates and how it applies, they're supposed to consult with, in the Senate right now, it would be with me and Senator Pratt, make sure we do this. They've showed us what they're doing in the past. I guess I have had never any concern that what I think they're doing is reasonable. And so I guess I don't think the whole point of the bill is to make it simpler so they can do their work without us having our hands on the thing. You could say, yes, the rate of inflation or deflation or no inflation, but it seems to me what they consult with our House counterparts and us about it. It just seems to me we can do that without any more words in here, but the committee has its choice.
Thank you, Senator Marty. And so I believe Mr. Nauman has some more to offer us. So Senator Westrom, with your permission, I'll go back to Mr. Nauman first.
Very good, Mr. Chair.
Mr. Nauman.
Mr. Chair and Senator Westrom, Ms. Stengel and I have done a quick search on 16A 103, which is the statute that we're looking at here, the entire statute, which governs the forecasting process. There is no other reference to inflation in the specific statute. What I will call your attention to, and I'll read it for the committee, is the first sentence of subdivision 1A, which is section 1 of the bill. Reads, the forecast must assume the continuation of current laws and reasonable estimates of projected growth in the national and state economies. I think that is really what is being talked about here, is the growth of the economy and its effect on the state budget. So I think in large measure, that's the requirement that MMB has and the burden that MMB has. That particular statute under current law precludes the addition of inflation, but the general guidance in that same statute requires MMB to consider national and state growth in the statute.
Okay. Thank you, Mr. Nauman. Before we go to Senator Draheim, Senator Westrom.
Mr. Chair, I'm happy to just pause right now and go to other discussion, and I'll come back.
Thank you, Senator Westrom. Understanding the pause, Senator Draheim.
Thank you, Chair. And just so members are aware, the reason I brought that question up when reading last night a little bit about CPI and all the different CPIs that are out there, there are some that don't go negative. So depending on what you're going to use to forecast, I think we need to set the parameters up a little bit. And so members are aware, we hardly ever have what I would refer to as a negative inflation or deflation. It barely happens, and when it does, it's minute. But I think if we're going to change this, which I agree it needs to be addressed, let's get it right. So I just wanted everybody to know kind of my train of thought and where I'm going and why I asked for that. Thank you.
Thank you very much, Senator Draheim. Senator Marty?
Yeah, Mr. Chair, a similar analogy to this is what Mr. Nauman or somebody was just reading, and on the forecast parameters must do continuation of current laws on 1.7 and reasonable estimates of projected growth in the national and state economies. They've been doing this for years, and there are times when we're in recession and the economy's not growing, it's contracting, and they do figure that. They automatically do that. They're trying to track the best they can the projected growth. In that case, we don't have to say or contraction because they know it's negative growth. So I'm just saying it's the same sort of thing. If we want to do it, we can add more words to it, but I think the growth in that case implies growth, positive or negative, in the economy. Here, inflation includes inflation or deflation. In other words, that's what we want them to do, and I think that's what the law would do with this, taking out those two words, taking out that one sentence where we told them put our finger on the scale.
Thank you, Senator Marty. Further discussion? Seeing none. Senator Pratt.
Or if we're done with the inflation deflation conversation, is that what you were asking, or are you asking if we were done with discussion overall?
I think we're going to take further testimony from witnesses on the list and actually going a little bit out of order to
Okay.
now have Mr. Kudrowski. But Senator Pratt,
Thank you,
want
Mr.
to be
Chair.
on the list?
I can wait until we get
Okay,
the testimony.
all right. Senator Eichhorn.
Thank you, Mr. Chair. And I assume this will be a couple questions for the agency, not the testifiers. I just want to make sure I have the correct understanding, and I think I do, but I just want to make sure. So when we're talking about like some of our special revenue funds like we use for roads and bridges, obviously inflation rates for like road construction, you can make the case that is different than normal CPI. Is this going to apply to some of those special revenue accounts? And I'll lump two of them together just to save a little bit of time. So on that front, and then also when you're thinking about the DNR, Health and Human Services, they all have large non-general fund sources that are used for payments. Are those going to be affected in any way, shape, or form?
Thank you, Senator Eichhorn. Either Deputy Commissioner Wrighton or Mr. Dahl?
Mr. Chair, Senator, I can answer that question. Certainly, we, in the consultative process, we would want to work with the legislature in implementing this bill. Some of those other funds, the transportation funds, DNR funds that you referenced, the ways in which dollars are appropriated in those funds and the ways in which revenue is raised in those funds is different from the general fund. And we would want to, again, work with the legislature to make sure we're clear in what we're assuming in those funds. But in general, this discussion has been more about the general fund. So I can leave it at that. I don't know, Deputy Commissioner, if you have anything else.
Thank you, Mr. Dahl. Senator Icorn, any follow-up?
Not a follow-up, but one kind of on the same thread. And I think you kind of maybe just answered it, but I just want to be clear for the record. So another area that I get concerned about is the Iron Range Resources and Rehabilitation. So obviously we, in that board, that agency does its budgeting different and kind of outside of the general state budgeting process. It's, you know, taconite taxes that come in, the agency gets some of that, and then the board in conjunction with the commissioner of that agency set the budget for the agency. Will this apply to that agency at all? Are we gonna have to make those considerations there, or is that still gonna be kind of its separate thing where the commissioner and the board members there will still fully decide that?
Mr. Dahl.
Mr. Chair, Senator, similar answer as for the DNR funds and trunk highway funds and other state funds. I would note that the IRRB does have some funding flowing through the general fund. So some of the treatment we're discussing here for the general fund may apply to some of their sources. But they also have special revenue funds that have different state law governing how dollars are appropriated in that fund and allocated to the agency.
Perfect, thank you. That's all, Mr. Chair.
Thank you, Senator Icorn. Further comment before we go to the next witness? All right, seeing none. Thank you very much, Deputy Commissioner, Director Dahl. We're going to go slightly out of order, members. I believe online we have Jay Kudrowski. Mr. Kudrowski, are you there?
I am.
Can you hear us okay?
Yes, can you hear me?
Loud and clear. We do not have you on the screen, but someone here must know something about how that happens. Just one moment, please, Mr. Kudrowski. Mr. Kudrowski, would you mind speaking again? Perhaps you could introduce yourself to the committee. There we go. You're all set. Mr. Kudrowski, welcome to the Finance Committee. Please state your name and start your testimony.
My name is Jay Kudrowski, and I live in Minneapolis. Mr. Chair and members of the committee, thank you for inviting me to speak today. I have been involved in this issue going all the way back to when I was Commissioner of Finance, working for Governor Rudy Perpich. I should also note that I started my career as a staff member of the Minnesota Senate. So it's with some pleasure I come back and speak today. The practice of not including inflation for expenditures in the Minnesota state forecast is imprudent. I can't say it any other way. No other states, no other governmental jurisdictions, no corporate organizations, no nonprofits use the technique that currently is entailed in Minnesota state law. I spent 17 years in the private sector. I had to do budgets there, that profit plans, if you will, and there we'd always include inflation on both the revenue and the expenditure side. Why is that? Because to do otherwise would overstate the resources available to the organization. So nobody would do that. It also misleads the governor and the legislators in analyzing and thinking about the resources available for the state. And let me point out, because I checked it yesterday, $1.6 billion is the inflation number for 24-25 biennium, and $5 billion is the amount in 26-27. So this is not an inconsequential issue. In fact, I think it's a very serious issue. I should also point out that all of the commissioners that served since I served are in support of making this change. and that was through the terms of Governor Perpich, Governor Carlson, Governor Ventura, Governor Pawlenty, Governor Dayton, and Governor Walz. All of those commissioners are in support of this change. This is a nonpartisan issue. It requires that we improve the public accountability for the dollars that are available. The lack of accurate data on the future financial conditions undermines public accountability for budget decisions. I would urge you to support Senator Marty's legislation to put inflation back in the forecast as it should have always been.
Thank you, Mr. Kudrowski, very much. Members, any questions for Mr. Kudrowski? Senator Pratt.
Thank you, Mr. Chair, and thank you, former Commissioner. I appreciate your testimony. Maybe you can help me understand how you used inflation when you were doing the budget forecast in the past. And let me, preface that by saying we had information on what the labor contracts would be. We had information on what, take K-12. We had projections on what student growth would be, which is not inflationary in and of itself. It's just a matter of the services that cause a rise in the total cost. So help me understand how you applied the actual inflationary index, and how did that influence the budget? Did you then apply that inflationary index to all the agencies?
Mr. Kudrowski.
Yes, Senator Pratt, we would use the inflation estimates from our national consultants. The Council of Economic Advisors would review that and make sure that they were comfortable with the inflation factors that were being supplied by that national consultant. We would then take that and use it both on the revenue side as well as on the expenditure side. On the revenue side, we would use that to say how much the economy might be growing, how much inflation would be occurring, and that would inform us as to how we would estimate revenues. On the expenditure side, we would look at general inflation, but if we knew that petroleum products were going up dramatically, as they have in certain periods of time, we would put that in as a separate factor. And the Minnesota Department of Transportation would have much greater inflation in their expenditures than the Department of Health or the Department of Human Services might have. So we would individualize it to the extent we could. We would use the general factor where it didn't make much sense to individualize those estimates.
Senator Pratt, any follow-up?
Thank you, Mr. Chair. I do have a follow-up. I'm just trying to figure out how to articulate it. So you mentioned, we've talked a lot about the revenue forecast and the inflationary impact on the revenue forecast, and and economic growth, right? Inflation is really more about the buying power of a given dollar. And when we talk about economic growth, there are a couple of things that factor into that, right? One is what is the real growth in wages, not just you've got the nominal and the real growth, which has been negative over the last several quarters. You've also got, by nature, right, the cost of goods and services that are taxable, the price goes up and therefore the revenue goes up, and it's simply a way to project what, again, an accurate picture of what your projected revenue growth is. I'm trying to figure out how you applied the index itself to the revenue projection outside of what you would just normally do as part of because I've done forecasting as well in the corporate level. So I'm just trying to understand how you apply the index in and of itself on top of all the other factors.
Mr. Kudrowski.
Yep, Senator Pratt. Again, the national consultant gives us a number of factors, inflation being one of them. They would look at other factors. We then would take those and apply them. In the case of the inflation, it might look at wages and the impact that it would have on wages, the impact those wages then would have on the income tax receipts for the state. On the expenditure side, the largest factor in the state budget is salaries. So we would apply a factor to salaries consistent with that national economic forecast. So if they said the CPI was going up 5%, we would try to understand what we thought then salaries would go up in state government and apply that factor.
Senator Pratt.
Thank you, Mr. Chair. So just to take that one aspect in and of itself, because I think it's a great example, because we are a people business and a large part of the budget goes to salaries and benefits. So you would project, or you would estimate what you expected, say, the next round of salary negotiations would be. Is that, in very simple terms, is that what you're saying?
Mr. Kudrowski.
Yes,
Thank you.
yes.
Senator Pratt, anything else?
I'm good for now, but Senator Dames might spark a question or two.
All right, thank you, Senator Pratt. Senator Dames.
Well, thank you, Mr. Chair, but my question was answered.
No spark noted there. Members, any other questions for Mr. Kudrowski? All right, seeing none, Mr. Kudrowski, thank you very much for your testimony. With that, members, we'll have Clark Bigler, Goldenrod, the Deputy Director of Minnesota Budget Project, come forth and testify, please. Good morning.
Good morning.
Please give us your name and welcome to the committee. Look forward to your testimony.
Thanks for the opportunity to testify today. My name is Clark Goldenrod. I'm the Deputy Director of the Minnesota Budget Project. We are an initiative of the Minnesota Council of Nonprofits. We identify and promote policy solutions that expand
Mr. Chair?
opportunity.
Could you ask the witness to get closer to the microphone? It's a little hard to hear.
Thank you, Senator Westham. It's a good reminder for all of us. If you could be a little closer to the microphone, it's easier. And of course, we're making a record online, so thank you very much. Continue with your testimony, please.
Yeah, thank you. Is better? Great. Initiative of the Council of Nonprofits, and we identify and promote policy solutions that expand opportunity and economic security to all Minnesotans. I want to thank Senator Marty for bringing this bill forward. We strongly support Senate File 46, and I'll discuss a few reasons why. First, it would make the forecast a more effective tool that gives policymakers, stakeholders, and the public a clear understanding of the state's fiscal health and helps them make better decisions. Two, it encourages responsible fiscal management. And then third, understanding the impact of inflation is consistent with recommended accounting practices. To that first point, this bill would make the state's budget forecast a more effective tool for understanding the state's fiscal health. To be effective, forecasts should be complete and give an accurate picture of the state's commitments. The effects of inflation are real, and including an estimate of what funding would be needed for current levels of services to keep up with inflation would help you as decision makers and the public to better understand whether proposed fiscal decisions are sustainable and to recognize how inflation puts pressure on the state's ability to meet its current commitments. And that brings me to my second point, that including inflation encourages responsible fiscal management by providing a clear understanding of the state's fiscal health, the funding needed to maintain current levels of services, and the long-term implications of budget decisions. And then finally, that this change is consistent with recommended accounting practices. As others have noted, for every year since 2003, our state's Council of Economic Advisors has recommended that the state's forecast planning estimates include inflation in both spending and revenue projections. They note that our current forecast methodology is, quote, inconsistent with both sound business practices and CBO Congressional Budget Office methods. And finally, it's important to note what this bill would not do. It does not make any budget decisions itself. The legislature would still have to pass and the governor to sign budget legislation to provide an inflationary funding increase in any non-forecasted program or service. And It's important to use all the information available to successfully craft and evaluate budget decisions, and including inflation in that toolkit makes good sense. Thanks for the opportunity to testify.
Thank you, Deputy Director. Members, questions for Deputy Director Goldenrod? Seeing none, thank you very much for your testimony. Committee will now hear from Mark Haberman, Executive Director for Minnesota Center for Fiscal Excellence. Senator Westrom.
Mr. Chair, I don't see a list of testifiers on the agenda I'm looking at. Do you have a list and how many others we're going to be hearing from?
I do, and I'm going to hand it to the CA and make sure that the list of testifiers is available to everyone. I just got it right before the bill was heard, Senator Westrom.
And can you just tell us so we know how many testifiers we're expecting?
Sure. Senator Westrom, this is the final witness on the agenda, although we would always offer public testimony if anyone here wants to testify. So out of the 5, this is the final one, Mr. Haberman.
And, Mr. Chair, just a
Senator
note
Marty.
on witnesses in general. The Finance Committee usually doesn't take a lot of witnesses because most bills have been through other committees. Because this was a finance policy matter, that's why we're having witnesses today.
And excellent witnesses they are too, Senator Marty. Senator Westrom, so do you want the list to be put out? Okay.
Just trying to benchmark how many more testifiers we had.
This is the final
looking
one,
for the
and
list.
Senator Westrom, this is the only bill on the agenda today. Having said that, thank you very much for your patience, Mr. Haberman. Please identify yourself and welcome to the committee.
Thank you, Mr. Chairman, members. My name is Mark Haveman. I'm the Executive Director of the Minnesota Center for Fiscal Excellence. For those of you who may not be familiar with the organization, we are a 97-year-old research and education organization supported by both memberships and charitable contributions. We typically refrain from getting involved in levels of taxation and levels of spending debates because our organization was founded on the idea that citizens get to make that call through their elected officials of how much government they're willing to support. What our organization has always been about is that the revenue systems that support that spending adhere to good tax principles and sound principles of public finance, and that the spending that's done is transparent, accountable, efficient, and accomplishes what it's supposed to do. This is a topic that actually we have been studying and writing about for a very long time. Matter of fact, we began shortly after the 2002 change from past practice. Over that time, we quickly concluded that this is actually a lot more complex issue than usually gets portrayed. We came at the issue from the standpoint of neutrality, asking ourselves what approaches introduce the least amount of bias into the budgeting process. The recognition of inflation is absolutely essential in the economic forecast, and as other testifiers have said, to make it a more effective tool to inform tax and budget decisions while encouraging responsible fiscal management. And that recognition already exists. I think it has been mentioned here, but it's often overlooked. This is in the forecast. It may not be presented in the way others may want it, but that information is there to debate, to discuss, to incorporate into decision-making. And so the debate is not whether to recognize inflation. The debate is how to recognize inflation, and whether formally adding inflation to the projected spending line item is a better approach than current practice. We concluded years ago, and still do, that retaining its current treatment in the forecast is the best approach for 3 reasons. First, general inflation measures, like the CPI, while appropriate and useful for informing budget deliberations, are not rigorous or precise enough to justify actually changing the starting point or baseline for lawmakers in developing a balanced budget. Dr. Robert Tannenwald, who's a senior fellow at the Center on Budget and Policy Priorities, has observed that, quote, ideally the policy analyst needs a precise deflator with the following characteristics. First, it should be based on a basket of inputs typically purchased by state and local governments within the state. And second, the price of each input should reflect the average prevailing throughout the state. To our knowledge, no information exists or report has ever been put together on the cost trends in the various categories of goods and services purchased by Minnesota governments, let alone construct a deflator along these lines. Now, the use of general measures like the CPI and the IPD falls short for a couple of different reasons. The CPI can address the geographic differences issue, but arguably constitutes the wrong basket of goods and services. The IPD, or implicit price deflator for state and local government, is based on government purchases, but is a national aggregate measure with larger states having much greater weighting in its calculation, and the Minnesota experience can be very different. Another issue with the IPD is that governments have the ability to manage and exercise control over the price of its primary purchased input and the largest component of the IPD, which is, as was earlier discussed, employee compensation. As a result, IPD has a sort of self-referential quality to it. Government decisions can lead to higher costs that in turn are used to assert and communicate concerns about the adequacy of government's own resources. And I think it's worth noting that the IPD has grown 17.4% faster than the CPI over the last 20 years. So it's for these reasons we feel that the use of general measures like CPI is best suited in its current role as sort of an informational supplement rather than presented as a projected fact of forecasted spending. Second, and this gets to the operational issue that Senator Pratt has been interested in, inclusion into projected spending transforms the forecast from just a planning tool to a potentially potent budgeting tool. Enactment this year into the base would create a $1.55 billion pool of what I call pre-booked biennial spending that doesn't exist in current law. As state history has demonstrated in the short period of time where this proposal was in place, that results in a potentially potent budgeting tool, allowing hundreds of millions of dollars of new and expanded government program spending not to be recognized as new and expanded government spending. And all that spending would then have their own accompanying tails and their own future inflationary pressures. We feel this undercuts both honesty and transparency in biennial budgeting. And finally, by incorporating inflation, it reduces pressures or incentives to scrutinize base budgets and look for efficiencies in service delivery. We become very concerned when we hear the argument that adding inflation reflects the, quote, true cost, unquote, of government services and what it takes to fully fund them. It is more accurately described as a crude mechanical calculation of the cost of maintaining the status quo and how government services are currently delivered. In closing, ignoring the reality of inflation is absolutely disingenuous and a detriment to responsible fiscal planning. But having a biennial budget framed and negotiations proceed in a context where most every dollar of discretionary government spending is effectively indemnified against inflation, we believe does not serve the cause of acknowledging reality or efficient, transparent, and fiscally responsible government either. We believe what we have right now is the right approach. Thank you, Mr. Chairman.
Thank you, Mr. Haberman. Members, questions? Senator Westrom.
Mr. Chair, to the witness, just your comments, and one of the areas you talked about is the pressure to find efficiencies in that. Can you repeat what you said there? Because it sounded to me, on one hand, you're advocating to put inflation back in, which naturally takes away some pressures budgetary pressures to find efficiencies. But your other comment talked about the need for that in a budgeting process, and I'm just trying to square that or get more clarity on that. If you could talk through that a little bit more, and how do we keep natural pressures in place to find efficiencies in the budgeting process if we just automatically add inflation?
Thank you, Senator. Mr. Haberman.
Mr. Chairman, Senator, yeah, I think when you indemnify current spending and how it's delivered with inflation, it will reduce the incentive, such the incentive exists already, to investigate and scrutinize base budgets. The Budget Trends Commission, for example, when it validated this proposal, although I should note that there were disagreements on the Budget Trends Commission on this approach. when they had their debate, they expressed a direct concern that this should not be a substitute for base budget scrutiny. And to the extent that when inflation is put into place and this spending is identified, we believe it reduces the incentive to look at more closely at alternative service delivery, other reforms, other sorts of activities that could provide the equal or better services at lower cost to taxpayers.
Senator Westrom?
And Mr. Chair, appreciate your comments on that. And Mr., maybe I could just ask a follow-up question. Can you give us your background again? I didn't really catch that, and just expand on that principle or thought, because that's some of the concern I have, and I remember some of the debate when this was changed 20 plus years ago under the Ventura administration. Senator Marty, you were here as well. But that is a great concern, to not take away pressures that are naturally going to force the digging deeper for efficiencies. And so expand on that a little bit more if you could. And I guess I didn't catch the background and what organization you're with and some of the work you've maybe done on some of those things. If you could expand on that a little bit more, it'd be helpful for me to have that insight.
Mr. Haberman.
Mr. Chairman, Senator, our organization has been involved in tax policy and budget research for 97 years. And our work on our study of this inflation, on this issue of inflation, first arose in 2005 when we did a whole report called Inflation In or Out, where we tried to disassemble the arguments and examine the issues, and that prompted the conclusions that I shared today. And obviously, this issue has been a recurring theme for many, many years in front of both the House and Senate committees. And so we have frequently testified and published additional reports and blog postings highlighting some of the issues that we feel do not get sufficient attention in the debate of this issue.
Thank you, Senator Westrom.
Mr. Chair, and thank you for that. Can you give us, first of all, did I understand your testimony correct, that you're saying as you weigh those balances, your testimony is that the inflation should be added back in and it shouldn't be worried about that it's going to take away additional pressures, or did I understand that wrong?
Mr. Haberman.
Mr. Chairman, Senator, no, we believe that the current treatment of inflation as a line item, as a supplemental line item, provides the appropriate information necessary to embark on good budgeting and good fiscal planning without creating a additional bias into the budgeting process.
Senator Westrom.
Okay, so Mr. Chair, so is your testimony to the committee that the current process is probably the better balance than adding inflation back in, or not? That's what I'm not fully clear on, and then I have one more follow-up question, Mr. Chair.
Thank you, Senator Westrom.
Mr. Chairman, Senator, that is correct.
Okay.
Senator Westrom.
And Mr. Chair, I wasn't 100% clear on that, so that helps clarify that. So I guess modifying what my last question was going to be then is, if we put this in place, and your testimony is that you think it raises enough concerns that it makes it more less likely to have those natural pressures if you just start including inflation in budgets and then there's less pressure on it. But if we do add this in, how do we get those natural pressures, or what suggestions would you have for us? Because that is a huge concern I have, and I know it's largely led to what made this bipartisan change. I mean, it was a tripartisan change back when it happened. because the autopilot was so obvious that you couldn't stop, excessive government spending, it seemed like. I mean, the new floor always became the number plus inflation added plus more wishes, dreams, and hopes, rather than let's look at the budget, let's look at the important new things we can do, and how can we square those two and also not exacerbate the tax collections and the taxes we need to take from the taxpayers of Minnesota. So I just would be interested in your comments on, if this gets added in, how do we find natural pressures to keep government looking for efficiencies, changes, getting rid of programs that have accomplished their purpose, if it's added in? Any suggestions you'd have for us as a committee?
Mr. Haberman.
Mr. Chairman, Senator, I really don't have any suggestions. That's why we have this concern. I do not want to suggest in any way, shape, or form that state government goes on autopilot in terms of not looking for opportunities to improve government services. We deeply respect the hard work that agency staff across Minnesota state government does, but it is a factor or consideration, I think, in this debate. And to the extent that, I think difficult choices and reforms are already sort of put at a disadvantage in budgeting, budget cuts and so forth. This is a consideration. If I may, just one of the questions that has been raised to me is, because this is a bit of a David and Goliath type of thing. You've got a tremendous lineup of very distinguished individuals on the other side of this compared to where we are. Although I will point out, I can point to a state economist and another finance commissioner and somebody who actually did participate on the Council of Economic Advisors who disagreed with this, be that as it may. I've been asked, so what is the difference? Why do you come at this differently? And I think it's a different perspective on how government operates and how the forecast operates. It has been pointed out many times that this is a planning tool, that this does not commit the state to any particular action, which is absolutely true. But premised on that is that when presented with this information, government has the ability to, in the response to a forecast, adapt, change direction, modify, and do it well and perhaps nimbly. We tend to look at government more as a important but very strong collection of powerful interests that are largely resistant to change for various reasons, and that the forecast itself acts as much as a fuel gauge as it does a planning tool. So I think it's just a different perspective on the political reality, for lack of a better way to describe it, of government and its operations and how this all works out.
Thank you, Mr. Haberman. Senator Westrom, any follow-up?
Mr. Chair, I do, but not right now. I'm happy to
Okay.
defer to other members for now.
Thank you, Senator Westrom. Thanks, Mr. Haberman. Members, other questions for this witness? Seeing none. Senator Westrom, did you mean you wanted to come back and ask Mr. Haberman more questions? Okay. Thank you, Mr.
No,
Haberman.
Mr. Chair, I appreciate his testimony.
That's the list of testifiers that we began with. Can I assume there's nobody in the audience who wishes to speak to the bill? Seeing none. Senator Marty, final comments. It is I'm sorry, Senator Pratt.
Thank you, Mr. Chair. I think what we intended to do is allow the testifiers to then come back with questions, not be completely done. because I may have some, I don't know who wants to answer these questions. I just wanted to make sure we had all the information before we moved on to a vote.
Senator Pratt, do you have a question for any of the testifiers or for the author?
Mr. Chair, I have several.
Senator Pratt.
Thank you. And Senator Marty, let me commend you on your passion for this idea. I know this has been something that you've been working on for many, many years, and I think we share the goal of having a accurate picture of our financial status as a state. But as I've been looking through this, I'm still trying to figure out what we're trying to accomplish, because, as I've talked to the last two two of the last three finance chairs, Senate finance chairs, they've indicated that the use of inflation was really a budgetary tool. And if I go back and if I look, right, let's do apples to apples. In the February 21 forecast, we projected a nominal surplus of $260 million. And we said that inflation would eat into that by basically a little over $1 billion. And would have projected that we should have had a surplus of a negative $782 million. Now, we know that's not where we're at today. If we were to look at the February forecast for 24-25, the projection was a nominal surplus of $845 million. Estimated inflation impact to state spending of in excess $2.5 billion. We should have had a deficit of $1.4 billion. And if I go back to page 18 of MMB's presentation that they gave us earlier in the week, shoot, that was just yesterday. Oh my goodness. We now have a structural balance in 24-25 of $6.3 billion, and estimated inflation of $1.5 billion, for a structural surplus of $4.775 billion. That's a $7.7 billion swing in 2 years. Now, some of that is influenced by actions that were taken by the legislature, right? We negotiated labor contracts. We established formula increases for K-12. We changed health and human services spending. We did all sorts of things along the way. But, Mr. Haberman touched on it in that including inflation in the budget forecast has if it's truly a budgetary tool, as the other finance chairs have told me, implies that we are going to increase spending by that amount. We also know that it's a fairly, based on just what we've seen in 2 years, it's a fairly inaccurate estimation of where we are. So, Senator Marty, what I'm trying to figure out is if I go back to slide 18 on the MMB's presentation, I can take the structural balance of $6.3 billion, right, which is spending under current state law. I can take MMB's estimate of what the inflationary impact would be on salaries and other goods and apply that, and I can come up with, maybe for lack of a better term, real budget surplus of $4.775 billion. Haven't we already, in some instances, in some form, as we go forward with the budgetary process, haven't we already factored in inflation as we go to say, you have the tool to factor that in as you set targets? And it's a long question, Senator Marty, and I'm sorry I prefaced it with a lot of numbers. And again, we share the goal of having an accurate picture of where we're at. So we start from that premise. It's, as Mr. Haberman said, this is not a partisan issue, but and I don't intend it to be a partisan issue.
Senator Marty.
Mr. Chair, yes, a long question. I'll try and get it, parts of it, and if I miss something, let me know. First of all, in terms of Senator Murphy compared weather forecasting to economic forecasting, and weather forecasting is quite accurate for 10 days out or so, and we get out a few more weeks than that, and it gets pretty inaccurate. And we're asking our state economists and MMB and others to calculate right now. I think it's probably about 29 or 30 months out for the budget we're putting together, till July of 2025. And that's pretty hard to predict. And the wild swings, I think that you're mentioning in the last couple of years, COVID, I don't think, you look at the charts that the state economists put in about the estimates, and you see these huge spikes. And it was changing in 2020, it was changing overnight practically in what was happening to the economy. And so I think if we're expecting this to tell us exactly what's going to happen, it can't. There's no way it can. That's why I want to have what the economists present to us, what MMB presents to us, is the best guesses they have. That's why we should have things like reserves. That's why we should have rainy day funds. That's why we should have things to cover those kind of risks. What I'd like to have is the most accurate information. As Mr. Haberman pointed out, there is some disagreement among economists maybe, but our Council of Economic Advisors and the last 5 or 6 finance commissioners have all agreed that we ought to be factoring it in this way, and that is that we take our legislative thumb off the scale and let them do the best work they can. That's all this is doing. This is not putting no change in our budget. Based on the December forecast, we got $6.3 billion to work with. As you point out, they would say in their projections for what the inflation would be, and this bill only is going forward, of $1.55 billion, so you say $475 billion. To me, I want to know as much of that information as we can as we put together a budget. After this, I wanted to talk about the fact this doesn't look back. I think we ought to be aware of what's happening going back, and I'd like to talk about that more. But the reality is the projections for what inflation was going to be over the last couple of years were much less than they were, and the budget that, I'll say, Senate Republicans who were in charge last time and House DFLers who were in charge last time and the governor put together 2 years ago, the budget they put together, if we were to figure out, which is what the legislature's job is, and you mentioned how we can factor in inflation as we wish, if we factor that in, how much more do we have to do if we want to make sure Department of Corrections has the right budget, or Department of Transportation, or Education, or any of the things? How much are we going to put in there? That's our decision. We have that $6.3 billion to deal with, even if they say inflation is 1.55, and as I'm pointing out, what happened the last couple of years, because gross underestimation what inflation actually was. To me, I want the best numbers we have. This is purely an informational tool. I don't want our weather forecasters to say, we don't like it really cold, so make it sound, estimate on the high end of your estimates. I think we want to have the best forecast we can have. That's all this bill is attempting to do. It's not changing any policy. It's just simply saying what kind of information we want.
Thank you, Senator Marty. Senator Pratt.
Well, thank you, Mr. Chair, and I agree with you, Senator Marty. We want the best forecast that we can have possible. But I'll go back to where we were in 2021, right? For this current biennium, for fiscal 22 and 23, we were projected to have a $260 million nominal surplus and a you know, if you factored in inflation, a 1.4, no, that's not, a $782 million deficit if you were to factor in inflation, and if we were to spread inflation across the budget. We ended up with in excess of a $5 billion structural surplus. Just on this current, on this current budget. And Senator Marty, as we set the targets in 2021, we were using that $260 million and saying, okay, if we're going to spend on this, then we have to take out here, we have to take out here, we have to take out here. To your point, we have the inflation number that's provided to us by MMB. And even you said, you know, we'll be taking out of the $6.3 billion. But if your bill passes, we'll actually be looking at, I've got so many numbers here, I lost 4.8 billion. And then we'll be subtracting out the increase in wages due to contract settlements. We'll be deducting increases to state budgets to account for inflation, as Senator Eichhorn had mentioned, that maybe have different influences on what the inflationary impact might be. So Senator Marty, as we go forward, as we pass budgets for fiscal 24-25, don't we have the tools in place already that don't necessitate a change in state law? Because we're getting that information, as you said, as an additional piece of information for us in setting those targets and those budgetary for those budgetary targets that we can then apply to the various agencies.
Senator Marty.
Mr. Chair, I guess I think that we should be trying to say, look, we want the folks who, the accountants, the economists, others to do their best guess, give us the best information they have. We make the decision. That's why I would argue we go with what the Council of Economic Advisors, what we go with the former finance commissioners have said. In the commentary, which I put in your packet from the one that John Gunyu, Peggy Inglis, Jay Kadrowski, Tom Triplett, and Pam Wheelock, the 5 finance commissioners, wrote a couple years ago, they said, of course, not counting things in what they decided to do in 2002, of course that makes things look better than they actually are. That law enables both those who want to spend more and those who want to cut taxes falsely claim there are more than enough resources to do so without trade-offs. I hear from a lot of our colleagues here on both sides of the aisle, oh, we got money to do this and money to do this, and it's not really there. And to me, we make the decision as a bipartisan legislature, as a governor and legislature, House and Senate. We put together a budget, and we can do whatever we want with it. We can go above 6.3, or we can go way below 6.3 in how much we want to allocate. We make the decisions. We have to fall within guidelines of what's fair and what's whatever, but we don't have to fund inflation. We can fund more than inflation. It's our choice. We put together a budget. I'm just saying this is just a planning tool. We ought to have the most accurate stuff we have, and that's what we're hearing from all the experts. And again, it was a political decision, and I can explain why, but political decision, and the governor at the time did not support it. I think he vetoed the bill it was in. Somebody told me, you or somebody told me that the other day. But that there were people of both parties who thought this will make things look better than they really are. Let's do it. I'm saying let's just take that out of the law and go back to where we were because it works.
Thank you, Senator Marty. Senator Pratt and then Senator Murphy.
Thank you, Mr. Chair. Well, I can't speak to the motivation. I heard it from a senior member as far as maybe what the discussion was, but I can only speak to my experience here in the legislature. I can only speak to the conversations I've had with past finance chairs. And that is that inflation, if we're looking at the most accurate picture of where we're at as a state, I don't know, as I heard the discussion around how we are doing the revenue forecast, right? We're projecting what wage increases will be, right? We're increasing what the net wage increase will be, because right now our wages are, from a real standpoint, below the nominal inflation rate. We've got negative real wage growth. We are, by statute, modifying the tax brackets. We're indexing them to the chain CPI. And by state law, that affects the tax collections of the state. But by state law, we are not increasing spending at the rate of inflation. If we were to do that, then by law, that would be factored into the spending forecast. And maybe that's a good question for Ms. Rattan, would be if a budget had an automatic inflator, because I know you're inflating for certain budget areas, wouldn't that then necessitate that were already built into the budget?
Deputy Commissioner, thanks for coming back. That question is from Senator Pratt. After that, we'll go to Senator Murphy and then Senator Wester. Members, just a heads up, we have a hard stop at 10:30. Deputy Commissioner.
Senator Pratt and Mr. Chair, yes, if there was an inflationary factor built into a formula that based on our calculation of the base going forward, that would grow by law. And therefore, yes, we would count that in the forecast.
Thank you.
Senator Pratt, any follow-up?
Maybe, but I'll let Senator Murphy go for now. I don't want to dominate the conversation.
Thank you, Senator Pratt. Senator Murphy.
Thank you, Mr. Chair, and thank you, Senator Pratt. I didn't do the math calculations that you have done over here, but I, really love that we are using pencils and not pens in this committee, at least for me. This has been a really useful conversation, and we're talking a lot about a forecast and then the work that we have to do together. There's a woman who lives in the district I represent named Pat, who called me 2 days ago. She called me because she'd sent an email that got lost in my junk. That's a systems problem. But she'd been waiting to hear from me because this is her number one issue. She wants us to restore inflation in the budget. And for her, it reads like a gimmick that we would reflect inflation on one side of the ledger, but not on the other side of the ledger. And she doesn't think that expresses the integrity that she wants to see in the work that we're doing. So I know we're having a discussion here about our work, and we're going to continue to get important forecast information so that we can make the decisions that we have been sent here to do by the voters. But I also think it's important to recognize that Minnesotans are looking at what we're doing, and they're reading where we're at and making their own judgments around that idea. And that's why this is an important issue to me. I think I'm in the middle of tenure when I look around this table. So when I was elected in 2006 and came into 2007 as a new member, people were so excited because we, the state, had a $1 billion surplus. And they were astounded about what that meant. And when you think about $1 billion now in comparison to what we're experiencing, it seems like such a different time. But by the time we were through setting that budget, and I'll never forget this because I was in a meeting with the then speaker who was starting to see the beginnings of the Great Recession. She was freaked out. And she freaked me out because things were changing so quickly. So as I listened to Mr. Haberman talk about his concerns about this, and I think about my responsibility as a person empowered to help set the state's budget, I appreciate that the forecast is a forecast, and I need to use my judgment. And having been through budget cycles where we've had to cut deeply in ways that really did hurt, not just Minnesotans, but our economy, where we have chosen at times budget gimmicks like a school shift rather than deep cuts to our schools, and then we had to pay that back, which did send a signal to Minnesotans that we were not serious about our job. I do want to make sure that what we're doing here sends the message to Minnesotans that we're taking our budgetary job very seriously. And there's all sorts of factors, and I'm not a part of the Council of Economic Advisors. I'm not. But I do know how to read and make a judgment, and with my colleagues, make the best decision that we can make together for the state's budget. And I think including inflation as a part of this on both sides of the ledger is an important part of the transparency and integrity of our work. So I want to thank you, Senator Marty, for bringing this forward.
Thank you, Senator Murphy. Senator Westrom.
Mr. Chair, I would like to move the oral amendment I referred to earlier. I believe it's just adding the words "or deflation" after the word "inflation." Mr. Nauman can confirm if there's anything else I need to do.
Senator Westrom proposes an oral amendment. Mr. Nauman.
So, Mr. Chair, as I understand Senator Westrom's intent on line 113, after inflation, insert "or deflation" before the comma. And as I'm writing myself, on line 1.14, after inflation and before the comma, insert "or deflation." Senator Westrom, does that comport with your intentions?
That sounds like it's correct, so thank you, Mr. Nauman.
Thank you, Mr. Nauman. Thank you, Senator Westrom. Senator Westrom moves an oral amendment. Senator Marty.
Yeah, Mr. Chair, I don't have strong feelings about it. I oppose it because I think it's just, we don't talk that way. The rate of inflation or deflation, or we probably should put or no inflation or no deflation, whatever, neutral. I think it's kind of cluttering up the law, and I think this is what has happened in the past. And again, I go back to the forecast. They project the forecasted growth in national and state economies, and never has anybody questioned when they say there's a recession, we think it's going to shrink. You don't have to say they have to forecast the growth or shrinkage. You say the growth, which could be positive or negative. You forecast the rate of inflation or deflation. I mean, it's the same thing. It's positive or negative. So I think it's cluttering it up, but it's not a big deal. So, Mr. Chair, I oppose the amendment. But
Thank you, Senator Marty. Other questions or comments to Senator Westrom's oral amendment?
Mr. Chair,
Senator Westrom.
if there's no other comments. Mr. Chair, I think this adds some belts and suspenders, but if deflation has no economic, a specific economic use or term, then we shouldn't even have to have the word deflation in our discussion of economics. And I just think, in plain language, when people hear inflation, if you're inflating a balloon, you're not taking air out of it. It's expanding. When you deflate a balloon, you're taking air out of it and it's shrinking. And so I just think it adds that type of clarity to the future readers of the statute if this passes. And so I just think the discussion around the table has said that that's the intention. So I don't see why we wouldn't put it in right now, because that's more accurately reflecting what we all intend, and nobody has to wonder in the future, did they mean a negative inflation instead of deflation? Or is deflation included or not included? Because every word matters in construction of statutes, as you know, Mr. Chair, as a good lawyer, Senator Marty, you know the importance of every word, and if it's not in there, people will read that into, well, if they didn't put it in, they didn't mean it. And so that's why I would urge us to put it in right now, because I think it captures the spirit of what the author has told us his intention is, and I just think it more accurately covers both sides of that while we're having this discussion.
Thank you, Senator Westrom. Senator Pappas.
Thank you, Mr. Chairman. In all due respect, Senator Westland, I think we've talked about this almost to death. And I do think that in economic terms, inflation does include negative inflation. And I don't think it's at all necessary to add the word deflation. I just think, what if it's zero? Then what do we call that? We call it no inflation. So I just think the term inflation is all-inclusive, and we should just leave it the way it is. So I oppose the amendment.
Thank you, Senator Pappas. Senator Draheim.
Thank you. You know, part of the reason I brought up the discussion originally on the deflation was because when I was refreshing myself on the different indexes on inflation, there are some that don't go negative. And we know that we have had some deflationary periods in time two in recent time, but they're very minute. Things have been different in the world, and things have been going up and down, up and down. And I just think it's prudent that we put it in statute, because in 20 years, you know, who knows who will be here? Hopefully not me. And I just, if we're going to define something or make sure it's included, I think it's only the best practice, I guess I'll rephrase that, is to put both inflation and deflation. So in 20 years, they understand why we put it in there. And I would ask again to the agency, and I don't know what you use on the forecast, if it was the chain CPI or just CPI, is there a negative CPI in the last 20 years in whichever form of CPI you used on the separate line item on the budget? Thank you.
Thank you, Senator Draheim. We are on the oral amendment to the bill, and with that, Mr. Dahl, I see came forward. Any response to Senator Draheim's question?
Thank you, Mr. Chair, Senator Draheim. I don't have the specifics in front of me. However, I am the one who does the calculation of that extra line that we currently publish. And there have been instances in the last 5 years where in a given forecast, there's been a year or a quarter of negative inflation, and we have counted that negative inflation in our calculation.
Thank you, Mr. Dahl. Senator Draheim, any follow-up? All right, thank you very much. Members, we're still on the oral amendment. Senator Dames.
Well, Mr. Chair and members sitting here and listening to this debate, and the reason we don't want to do it, I think, is a pretty weak reason. But maybe to solve the whole issue is to just put, for this act, the definition of inflation includes deflation. And now that should make everybody happy.
Senator Dames, I'm going to toss that back to Senator Westrom, or do you want to propose an amendment to the amendment?
Well, I guess I would ask Senator Marty to rethink his position on this. It's not cluttering the bill up, and it does put in clarity. And I've heard so many times by so many members sitting at this table about we want to make sure we have clarity in our bills, this, that, and the next thing. So there's no ambiguity. Down the road, people understand what this bill was for. And so I'm finding it a pretty weak reason not to want to do it, because we don't want to clutter the bill up with verbiage. That was kind of a tongue-in-cheek saying we need to define the definition, but you know, maybe there's more willingness to do that than there is to, Senator Marty, as you're saying, clutter the bill up. I don't know. I'd like to hear your thoughts on that.
Thank you, Senator Dames. Senator Marty?
Mr. Chair, real briefly, no, I said, you know, if the committee chooses to put it on, the committee chooses to put it on. I just think it's unnecessary because, as Mr. Dahl mentioned, when they've had negative inflation, they count it as negative inflation. We don't need the word, and frankly, this is a provision where they're just consulting with legislators on what they're doing. They've been doing it this way. They're going to continue doing it this way. I'm trying to make the thing simpler, and yeah, some people want comfort language in all the laws. I've never been a big fan of comfort language, because I think the shorter and more concise things are, the less confusion there is. Because, oh, you forgot to mention deflation here, you did mention it there, so you clearly thought a distinction between the two. It's just my philosophy of how you ought to legislate to be as clear as you can, not with adding words in for comfort. And so committee can do as it wishes, but I
Thank you,
think we should move ahead, vote.
Thank you, Senator Marty. Senator Dames, no follow-up?
Well,
Or follow-up?
I'm not going to make an oral amendment on the oral amendment, but and Senator Marty, when you say it's up to the committee to vote, let's not kid each other. You're making that decision from where you're sitting. So with that, I'll just thank you, Mr. Chair.
Thank you, Senator Dames. Further comment to the oral amendment? Seeing none, all in favor of Senator Westrom's oral amendment signify by saying aye.
Aye.
All opposed? No. The nays have it. The amendment is not adopted.
Division, Mr. Chair.
Senator Westrom calls for division. The committee administrator, can we do it by hands?
Hands.
Okay. All in favor of Senator Westrum's oral amendment, please indicate by raising your hand. 1, 2, 3, 4, 5. All opposed, please indicate by raising your hand. 1, 2, 3, 4, 5, 6, 7. Division, the amendment is defeated 7-4. The oral amendment is not adopted. To the bill. Further comment and questions to the bill. We have Senator Westrum and Senator Pratt. Both raise your hand. Again, members, we're trying to get to a hard stop at 10:30 so that if we could, maybe go with Senator Pratt first and Senator Westrum. Senator Pratt, briefly, please.
I'll defer to Senator Westrum for now.
Thank you for that, Senator Pratt. Senator Westrum.
Mr. Chair, to the bill, I just would urge a no vote on this bill. I think what this does is essentially returns us to the days of putting government back on autopilot, as we heard the last testifier talk about. Basically, we're going to bake in the cake inflation for all government spending and then start giving them new money on top of that. That isn't how kitchen table economics works for family budgets. You've got to deal with what you made last year and figure out ways to come up with more income for the next year if you've got additional expenses. But the public likes to deal with real numbers. And what this does is allows manipulation of budget surpluses and deficits, as Senator Pratt pointed out. Years where we've had a $265 million surplus in recent years would actually be portrayed to the public that we've got a $1 billion deficit because we've baked inflation in it automatically. Whether that inflation happens or not, the public would be led to believe and manipulated that there's a $1 billion shortfall. So therefore, we're going to have to raise taxes would be one solution by one political party, perhaps. And that's just not being fair and honest with the public, the taxpayers. Let's give them accurate numbers. The current process gives us the inflation number, so then we as legislators can make that decision of the surplus we have, $265 million, which is an accurate number, in the examples Senator Pratt shared with us, reminded us all of. We can decide how much of that should go to inflation, how much of that should go to rainy day, or how much of it should be given back in tax breaks or some other mechanism. But it's honest budgeting. That's what led to this in 2002, is getting away from this baking the cake that's got an extra layer on it because government's always going to get fed first. Some of you, maybe if you've read up on Franklin Delano Roosevelt, the history of him, and his strong opposition to public unions was a surprise to me when I read about this. But his main point of public opposition to public unions was because government uses drug money. And let me explain myself. OPM is what government uses. That's drug money, if you want to classify it that way. Other people's money. And that's the reason government doesn't have the pressure as Senator Marty or you, Mr. Chair, or Senator Pratt, or any citizen paying out of their pocket. We're using other people's money, and so to bake that in the cake before we discuss any other budget options, any other efficiencies, any other programs we could get rid of, is an injustice to the public. And it's an injustice to the taxpayers, and that's why this policy, as small of a bill as this is a significant change in how we treat the taxpayers and how we look at government and growing government, because all of a sudden the number reported by the media is going to change the public's perception of a surplus or a deficit. And all of a sudden you're going to turn a $265 million surplus, that's an accurate number, that's money over what we expended the prior budget, to all of a sudden telling the public and manipulating the public that it's a $1 billion deficit because you've added inflation in, which is a projection. And Senator Pratt gave us a couple more examples, and our current budget forecast would be able to be manipulated to the public by shrinking it and baking in a lot more spending for government. We can make those decisions as legislators. I don't think we should go down this road because I think it unfairly puts the taxpayers at a disadvantage with inaccurate information, but that information will become the gospel because that's what's going to be reported from the government agencies, and that's what most of the media will report, and that's the number that everybody will be talking about. So that's why this change was put in '02, because most people saw what was happening. Government always continued to be on autopilot, always got their money first, and the taxpayers were left second.
Thank you, Senator Westrom. Senator Pratt, briefly.
Thank you, Mr. Chair, and I guess maybe I should have gone first, I don't know. But I think Senator Westrom touched on some of the points that I was going to make, and I just really want to summarize this because I don't think this is a partisan issue. I think it's just simply a difference of opinion. When we talked about the revenue forecast, and I hate to call it revenue because revenue is earned, so let's talk, when we talked about the tax collections and how CPI was used, the testimony was, well, we're using the inflation measure as an indicator of the growth of the economy, which by state law impacts the amount of taxes collected and received by the state. If there is, that is in statute, and there is nothing in the inflation number on the tax collection side that's not included in state statute, other than maybe some economic forecasted growth. We have, we index our tax rates. That's in state law, and that's factored into that tax collections number. What we haven't done, and when we forecast spending, and we heard this the other day, we take into account economic factors. We talked about the decline of student enrollment in K-12. We talked about the various impacts that were happening across the board. And so, in some sense, the increase or decrease in spending is being impacted by economic factors that are being accounted for in the analysis. Inflation is simply a measure of the buying power of the dollar. That's all it is. And if we were to include inflation in the top line and presume that we are, in fact, going to fully fund the inflationary cost, as Senator Westrom said, or Mr. Haberman, sorry to demote you, Mr. Haberman, then we give an inaccurate picture of where we are. The fact of the matter is we're going to end the biennium with $12 billion in the bank. Not $10.5 billion. We're going to end up with $12 billion because we haven't taken those inflationary pressures. And as we go through and as we settle contract negotiations, as we determine how much we're going to increase K-12 spending, how much we're going to increase HHS, how much we're going to increase the budgets, the operating budgets for all of the agencies, we're going to take that into effect, and we're going to be subtracting from that top line number. But Mr. President, or I'm sorry, Mr. Chair, you know, I do, Senator Marty, I do sincerely appreciate, you know, your motivation for this. I really do, and I would ask you maybe to table this bill until next week so we can continue to have discussion. But Mr. Chair, as Senator Marty said, the word deflation was unnecessary. As I look at the department's forecast and as I look at their presentation, we already have an indication of what that inflationary aspect can be. We can do that math. I did it. It's $4.775 billion. And if we want to work off of that in setting targets, we have the tools necessary to be able to do it. And so, Mr. Chair, I'm sorry, I promised I'd be brief, but Senator Marty, I would request that you table the bill, that we continue to have this discussion. From the standpoint, if we do take it to a vote, Senator Marty, I respectfully will be voting against the bill because I really do think it's an unnecessary change that has broader implications, as I've discussed with my conversations with former finance chairs, that this is not a planning tool, this is a budgetary tool.
Thank you, Senator Pratt. Thank you, members, for a robust discussion, and to be continued. Senator Marty moves that the Senate file 46.
Mr. Chair, we are going to have a busy agenda. This was, I thought, a small bill. I know there's disagreement on it. It had some bipartisan votes in the House, I believe, but I'd like to move the bill. You can continue. I figured, we've talked before, I knew you might oppose it. I understand others may too. I think it's a reasonable thing, and again, we're the only state that does it this way, the only state. And I think that our finance commissioners of the past and the economists, I think it's a reasonable change, and you don't have to support it. I don't expect you to. If you oppose it, you shouldn't vote for it. Anyhow, I've moved the bill.
Mr. Chairman, I'd like to request a roll call vote.
Senator Pappas requests a roll call vote. Roll call vote is granted. Senator Marty moves Senate File 46 be passed out of this committee and sent to the floor. Members, we're going to take a roll call vote.
Mr. Chair?
Senator Pratt.
Thank you, Mr. Chair. If I could, I would request that the roll call be printed in the journal.
Request to print the roll call vote in the journal by Senator Pratt. That request is granted.
Mr. Chair, you need to have 3 hands.
I apologize. In order for that request to be granted, we will need 3 hands, if I understand correctly, and seeing 4 hands, that request is granted. Thank you, Senator Pratt. Members, we're going to have a roll call vote that'll be called off by the committee legislative assistant.
Chair, Senator Marty.
Aye.
Senator Friends.
Aye.
Senator Pratt.
No.
Senator Dames.
No.
Senator Champion.
Yes.
Senator Draheim. No. Senator Eichhorn.
No.
Senator Mohammed.
Aye.
Senator Murphy.
Aye.
Senator Pappas.
Aye.
Senator Westrom. Senator Wickland.
Aye.
Members, there being 7 aye votes and 5 nay votes, Senate File 46 is passed and will be sent to the floor. Members, before we adjourn, one quick item of business. The vote on the oral amendment was not 7-4, it was 7-5. We should have the record reflect that. With that, Senator Marty, you're on your way to the floor.
Sure. Mr. Chair, thank you, members of the committee. I did want to also, and we don't have time to talk about it now, but I wanted to point out that this is inflation going forward. And if we want to know accurately where things are, we should have a discussion of where we are compared to 2 years ago, and I'd love to discuss that at some point, but we don't have time right now. So with that, Mr. Chair, thanks, committee. You have to adjourn it. Nick, you have to, did you adjourn?
Members, we are adjourned.